Hello, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from the Uptrend.com. In the pre-market this morning, stock index futures are currently trading down across the board. We don't have any major economic numbers coming out this morning. At the same time, commodities are trading higher in the pre-market. Starting off looking at the Dow, we've got early warning signal up at the top of the screen. We have a lot of those at the moment. The big winner on the Dow yesterday was Boeing. Boeing popped, hit our first price target there at 162.50. If you went long Boeing, hopefully you had an order in up at that level. And of course, so we're running into the flypaper channel. So not expecting a lot more out of Boeing at this time. American Express was the biggest loser on the Dow yesterday, back on a sell signal as of Monday's close, and followed by Merck. Merck's been on a sell signal for a while now, so no change in trend there. Looking at the SPY, early warning signal at the top of the screen. We do have the Chevron down here as another early warning signal, but still no red on the chart. We're closing above the upper channel line, so not that worried for a sell signal on Tuesday for the SPY. What worked, Kenvu was the big winner yesterday, running right back up to the recent high. Not something I would chase at the moment. And then NVIDIA was the second big winner on the S&P 500. It looks like it wants to head up to 150. So if you still have some NVIDIA left, which I hope you do, then put in an order just below that 150 level. Looking at the equal-weighted S&P 500, so a little different picture here. Some more weakness. Trading down into the channel. Then looking at the NASDAQ 100, we're still, thinking it would go up to 500, but again, it treaded water yesterday. The equal-weighted NASDAQ 100 was down a little more into the channel, so certainly the possibility of a sell signal for that ETF on Tuesday, and that is also true for the next generation NASDAQ stocks. We may see sell signals in those ETFs. Now, what worked on the NASDAQ? Well, Marvell was the big winner yesterday, followed by Lululemon. What didn't work? Well, any of the broadcasters, media companies, Warner, Comcast, Charter Communications, those were all the biggest losers on the NASDAQ on Monday. Then looking at the rest of the market, we saw heavy selling in the Russell, small caps and micro caps yesterday, all still on buy signals coming into Tuesday's trading action. Now, moving on to the Canadian market, the iShares for the TSX 60 put in an outside reversal day yesterday. That may be the top for the TSX. We'll just have to wait and see. The big winner on the day was Tim Hortons, up over 3%, followed by Wheaton. Wheaton may have put in a top yesterday. We actually closed lower than we opened after putting in a new high. So we'll just have to wait and see, but wouldn't be surprised if Wheaton traders wanted to lock in some profits up there. And then TD Bank shows up on the best, top of the best movers list from Monday's trading action, up a little over 0.75%. Certainly no change there for TD Bank. What didn't work? Well, we saw some profit taking in Magna, taking us back down to the upper channel line. And then Canadian Apartments made a new low for this move on Monday. Then looking at the Vanguard Canada ETF, so looking at the TSX itself, we made a new high yesterday before pulling back. What worked? Well, Mag Silver was the big winner yesterday, followed by First Majestic, both silver plays, and then IM Gold, which continued its big move up from Friday. Then looking at NextGen was the big loser on the day after making a new high, so some profit taking there. Then Denison Mines also, after making a new high on Friday, had an inside day on Monday. Now, this morning, I wanted to finish off today's presentation doing a little recap of some of the topics we've covered over the past couple of weeks. Stock chart is really worth 1,000 words and probably more. When you look at a stock chart, it represents all of the information that's available, and it represents all the opinions on that information that's available. You may not have read every research report on this stock, but the market has. You may not have attended every press conference or listened to every investor call, but people that are closely associated with the stock, people that watch it daily, people that have a vested interest in this stock, they have done that. And so what they have done and their opinions on that is reflected in the price of the stock. So I really don't need to go and look at find research reports and read them on this particular stock, because I know what the market thinks of all of the information that's currently available. That is also true for this stock. I really don't have to go and look anywhere and ask somebody, what do you think of this stock? The market tells you what they think of a stock based on what's the price, the current price action, and which way it is trending. Now, I try to encourage people to do top-down analysis before they get involved with the stock. You don't have to do it every day. If you start off looking at the monthly, then the weekly charts, and then you can get down to the daily charts if you're going to trade a stock. If you're going to invest in a stock and not want to look at it on a daily basis, then don't look at the daily charts. And you don't have to do it that often. I mean, monthly charts change once a month, weekly charts change once a week, and daily charts, of course, change once a day. So, to figure out what's been going on with the stock and what its potential is, you need to start off with the big picture first. And so, looking at a monthly chart is going to give you the biggest overview, and it's going to tell you exactly how everybody feels about a particular stock, or they could feel this way about this particular stock. So, you want to start with the big picture first and work your way down. And by doing that top-down analysis, you might find out that, hey, I really don't want to be involved in this stock. The market hates it. And at some point it may turn around. It may also go bankrupt. When stocks are in long-term downtrends like this, of course, they're losing people along the way over and over and over again. And when, the overall market is doing something like this, and then a particular stock is doing something like this, if it's involved in an index, there's a good chance it could get kicked out of the index, which means it's also going to get kicked out of all the ETFs that follow that particular index, and that is a huge risk. Now, time frame is important. Your time frame, it's up to you. Do you want to be a long-term investor? Do you want to be a short-term trader? Remember, everybody else has their own time frame. And so when you see somebody on TV saying great things or terrible things about a stock, you have to understand their time frame. You may sit down and have lunch with somebody who can say nothing but great things about a particular stock because they're a long-term investor and they're really happy. They're getting their regular dividend payments, and you're sitting across the table from them and you hate that stock because on this particular week, it has been down 3 days in a row. It has generated a daily sell signal. It's crushing your intraday activity, whether you're looking at hourly, 15-minute, 5-minute charts, and you could hate that particular stock on this particular day and sit across from somebody who just loves that stock and has nothing but good things to say about it. Now, we use the flypaper channel to measure opportunities, and a buy signal in a stock that's come down to the flypaper channel and has history of investors buying off the flypaper channel, that buy signal is worth a lot more consideration than a buy signal in this particular stock, in which it has a history of the flypaper channel acting as resistance. So, we use the flypaper channel to look for areas of neutrality. We look for areas in which the market has found fair value in a particular stock, and then we're looking to see what they're going to do next. So in this particular case, it's more than likely the market is going to want to buy this stock off the flypaper channel, and in this case, they're going to want to sell into strength and try to take some more money off the table. Now, we talked about good things happening to good stocks, bad things happening to bad stocks. In every sector, you're going to have a baseline. In retail, it could be Costco, could be Walmart as your baseline. So if your stock is looking like this, it's looking pretty good. And stocks that are doing well, they act as good news magnets. And so as a good news magnet, is it going to get upgraded? Is it going to get added to a watch list? Is it going to get added to an index or an ETF? Are more people going to cheer that stock on? Yeah, absolutely. At the same time, when a stock is in, a long-term downtrend, it's a bad news magnet. Now, bad things started to happen for this stock back here. So it's been a while since, the market turned against this particular stock. And, when your baseline looks like this, that's not a good sign. Now, at some point, this stock may turn around. It may also go bankrupt, but it may also get kicked out of the major indexes that it's in, which means it's going to get kicked out of the major ETFs that it's in, and that's not good for the stock going forward. Now, the last topic this morning is when do we take action? Well, we want to take action at two particular times. The first one is at our price targets, and when we're trying to sell into strength, or the opposite is true if we're short a stock, buy into weakness, we want to do that at any time. So a lot of times there can be some activity during the day which pushes the stock up through our price target and gives us the opportunity to lock in some profit. So we have daily and weekly price targets for every symbol in the database, and we want to take profits at that point. We don't want to completely liquidate a position. The only time that we want to liquidate a position is at month end, weekend, or at day end. Those are the trigger times for actually liquidating a position. So, if you're using the monthly charts, the last day of the month, if it closes below the lower channel line, you want to exit the remainder of your position on the next trading day, so the first day of the month. If you're using weekly charts, then we're waiting for Friday's close. We don't care about Thursday's close or Wednesday's close. We're waiting for Friday's close, and if it closes below the lower channel line, we're going to liquidate the remainder of our position at the Monday open. And if we're trading daily charts, if a particular symbol closes below the lower channel line today at 4 p.m., not at 3:59, not at 3:58, we want to wait for the close, because that's the price that the pros went home with. They're closing their books. They're going home. They're comfortable going from 4 p.m. to 9:30 the next day with that particular price. So that's the price we want to deal with, not something that happened at 2:01 in the afternoon because somebody hit the wrong key on their keyboard. We want to just wait for the closing price, and then we're going to execute a sell order at the open on the next day. Okay, that's all I wanted to cover this morning. There's more topics to cover, of course, as we go forward. Thank you very much for your time and attention, and the next time you'll hear my voice is on Wednesday morning.